Welcome guys in this beautiful video. I'm just gonna be sharing with you how to trade synthetic indices or V75 on the 1 minute time frame. So I know a lot of you guys have been requesting videos on scalping synthetic indices. So this is a beautiful video to help you understand good approaches when it comes to trading this market in a very lower time frame like the 1 minute time frame. So in this video I'm just going to be showing you how, and also to be telling you why really you should be scalping this market. So before I can get started, remember to press that like button, and if you're not a subscriber, I don't know what you're waiting for, just press that red subscription button and remember to click the bell icon so that you do not miss anything whenever I post. So let us get started. I have seen that a lot of traders or retail traders, we are suffering because of one significant thing, which is trade management. One significant thing, which is trade management. Because if you are entering a market, I always say that if you're entering a market, it doesn't mean that the next step it is to exit the market. So the next step from entering the market, it is to make sure that you are managing your running position. It is to make sure that you are managing your running position, and that's the weakness of a lot of traders. And why are they failing to manage their running position? One, it is because of their time, or maybe we can also say time frame again. Why am I saying time and time frame? It is because traders can open a trade in the 30-minute, and all of a sudden in the next 2 minutes they're expecting to be having profits. In the next 2 minutes they are already expecting to be closing some profits. Yet if you look at the chart or at the price in the 30-minute perspective, then you need to make sure that you are ready to wait for at least around 7-8 candles in order for you to take your profits. So it means that you should be ready to wait something like 4 hours or something like 3 hours for you to take your profit. So if you will be wanting to take your profit in the next 5 minutes, in the next 10 minutes, then you need to restructure this thing, the time frames. You need to reconsider the time frames that you are going to be using. And the most dangerous thing is what I always tell you guys, that if you're going to be successful, you need to familiarize yourself, or you need to be used in taking big wins, not small wins. But then this thing that I'm just explaining, it makes a lot of traders to fall in the side of taking small wins or small profits. Why? Because they enter in the 30 minutes and in the next 10 minutes they've closed their trade. So they close their trade with very small profit, say it's $10, and yet if they waited for the 3 hours, because they analyze the market based on the 30 minutes, so if they waited for the 3 hours or for the 2 hours, just for those 4 candles to play out, if they are big candles, it means that they are going to take far more than they took. But then if you want to take trades or profits within the next 10 minutes, then you need to be going in lower time frames like the 5 minutes. So I have seen the desire of traders that they're desiring to take their profits at around 3 minutes or 5 minutes as they opened the trade. So then that's why the 1 minute time frame comes in handy. The 1 minute time frame comes in hand. It is the only solution to help you take your profits in the next 10 minutes, in the next 5 minutes after you execute your trade. So what I'm gonna tell you is that the reason you should be using this time frame as a retail trader, it is one, because this market, it is hard for it to sustain itself in the long term. Why? Because for a market to move in a anticipated direction for a while, there need to be some backing, there need to be some reason for a market to really respond from a support and go very high into another resistance. For a market to continue to move all the way down, there need to be some reasons. In the video where I was explaining about step index, the previous video from this one, I explained that the market there behaves in a non-uniform manner. Why? Because there is no backing, there is no reason, or there is no reality behind it. So same thing applies here. For you to anticipate a market for the next 2 days, for the next 7 hours, it really requires some advanced skill, and you might really find yourself in the negative side. Why? Because this market, there is nothing that can sustain it for a long time. It's not like currencies that, okay, in currencies you can be certain that, okay, the fundamentals are on my favor. The sentiment is on my favor. The technicals, they are on my favor. So the reports, they are on my favor. Everything is on my favor. Then I know that it is likely that the market is going to go up. So that's the safe thing about currencies. But here, it's something different. That's why maybe you really need to consider trading this market in very, very smaller time frames. Just doing what you want to do and then leaving or exiting the market. So that is going to save you in the dilemma of trade management, because you know that if you are scalping, you are just going to be spending like 30 minutes in a day trading in the 1 minute. You'll find yourself that you've opened like around 5 positions and all those positions have come into a conclusion. You have closed the profits, you have closed the losses, other than opening a trade in the 30 minutes or in the 1 hour. Yet you'll be busy checking the market in every 2 minutes. In every 2 minutes you are checking. That's not trade management. That's failure to control yourself, because you know that if you open in the 1 hour, you are likely to see the next different move in the next hour when the next candle comes in. So if you open a trade in the 1 hour, once you find yourself checking your chart every 2 minutes, you need to know that that's your downfall, because you'll find yourself panicking because you are seeing the price going down and yet it is still gonna reject and go and close above. So you'll find yourself panicking. So if you are used in this thing of keeping on checking, really you need to consider changing the time frames, because it means that you desire to take profits very, very quickly. So then you gotta shift the time frames and use maybe the 1 minute, 3 minute, 5 minutes, whatever time frame that is gonna suit you. And one last important thing is that when it comes to choosing time frames, guys, the reason I'm also motivating you or encouraging you that you should use the lower time frame is because of our capital or our balance that we have. I've seen a lot of guys who come to me on my inbox. A lot of them, they find with like $100, small amounts like $70, small amounts like $50. So because of this capital or because of this equity that we have, it really doesn't qualify us to trade in the 4 hour in this kind of a market, in this synthetic index market. We really do not qualify unless maybe you're trading some indices like V100, which will not take much from your account. But if you had such money, you really don't qualify to take a decision based on the 4 hour, because whatever decision you take, you need to know that one candle in the 4 hour might move a very, very large number of pips or large number of points. Yet one candle here, it cannot take that much. For an example, let's say you sell here on the 4 hour. Let's say this is the 4 hour. You sell on the 4 hour and all of a sudden the market goes against you. It hits your stop loss. In the 4 hour, you might find that you have lost like $50 of your account. And let's say then this is the 1 minute and it hits your stop loss. In 1 minute, you can find that you've lost something like $2 or $1. So those are very, very significant things, guys, that be sure of the perspective that you are looking the market into. Make sure that you don't look at the market in a bigger picture, which your account cannot handle. So thank you for watching this video. Remember to like, share and subscribe. Thank you.